Our group's name is Sesa, which stands for
Sammy,
Eric,
Sydney,
and Austin.
We have a theme in our portfolio that is to have some stable stocks that will be the staples of our portfolio, and we are going to complement these with undervalued stocks that will allow the portfolio potential for great gain, all while being diversified in uneventful case that a certain market were to collapse.
Our first stock we chose was Johnson & Johnson. They sell a variety of products in the healthcare field, including home goods, baby products, and cleaning supplies. We believe they are very stable, and it looks like they will be a steady stock for the next 5 years. Their profit's up 2.5% from last year, which is not great, but it's not bad. The dividend has increased for the last 52 years, so that's obviously a good sign for anybody investing in this company. The growth has been 40% every year since 2010. The yield is 2.7%.
IBM is our next stock that we chose. It is a well-known corporation throughout the world, and it has been a frontrunner in machine technology. Over the past 12 months, it has had a steady downfall of gross decrease. This is putting the stock at a relatively low price, but we are confident that IBM is going to have a major turnaround in the next year due to their new blockchain software and the extension of their Linux. Their gross profit margin of 55.1%, and because Warren Buffett said that it was a buy, and he even recently bought shares personally.
So he said it was a buy and then bought it himself. Just to be clear. Amazon.
Our next stock is Amazon, which we believe is a middle-of-the-road stock, and due to its size, name recognition, and innovation, we believe it will have steady increases in the long term. Amazon owns 10% of North American e-commerce and is growing daily. The next top 7 competitors combined own 2%. With its Amazon Prime package, it provides a plethora of free online TV shows and movies. Amazon will grow to rival Netflix in the streaming industry while simultaneously bringing new customers to its business. Over the last year, its stock has had an increase of 70%.
Under Armour is our next stock, and they are an established athletic and training clothier. They're like clothier, like somebody who buys, makes, sells, deals with clothes. So with this I'll just go on. So with its 5-year increase in value and company growth, it is growing to rival Nike in size and value, which we believe is going to be crucial in the years to come, as it is their biggest competitor. In the second quarter of 2015, revenue increased by 93%, and anticipated revenue was $7.5 billion by 2018. Expected to increase its international revenue by something to $1.35 billion. They just signed a deal with basketball's biggest star, Stephen Curry, and they have current deals with Tom Brady and many other star athletes. They just renewed a deal with the NFL, which is one of the largest promotions and users of athletic wear. Now with Starbucks.
Starbucks is a large name brand corporation that has great name recognition. When America thinks morning coffee, Americans think Starbucks. We firmly believe that Starbucks is an incredibly undervalued company that has done a great job of expansion while leaving plenty of room for growth. Currently, its largest competitor is McDonald's. Despite the fact that McDonald's sells many other products such as chicken nuggets, fries, burgers, etc., there is a relatively small market gap between the two. Over the past 5 years, Starbucks has had substantial increases in values and a price earnings to growth ratio, or PEG, of 1.93. Since its inception, the only dip or decrease in the value of the company was during the market collapse of 2008, but since then has more than tripled in value. Starbucks is also doing an incredible job of expanding internationally. With more than 5,200 or 5,200 new stores in the Asia-Pacific area alone, they are expanding internationally and are expecting to to continue that growth in all areas of the world. In the third quarter of this previous year, their international aspect of the business grew at 11%, which is the highest of the entire company. The company will continue to expand both domestically and internationally and increase its value for short-term and long-term gains.
So overall for our portfolio, Johnson & Johnson was our stable stock that we're investing in. That's been the same for 52 years with growing positively. Under Armour and Starbucks are both our undervalued stocks, and we believe they will continue to grow. Amazon, while it's not undervalued, it's continuing its growth with its new things that it's putting out, such as Amazon Prime and Amazon Student, and it's going to outrun its competitors in the long run. IBM is going to go up long term, and although it's going to be risky, we think that it will eventually go up with its new software that it's coming out with. And overall, these stocks are all complements of each other, but they also provide a diversified portfolio that will grow in long term.